Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and we're going to, of course, take a look what to expect in this week of trading mid-November. By the way, if you're interested in our free indicators, check out this link right here. There are also a few paid indicators if you want to upgrade to the more advanced ones, but a lot of free ones. Check it out, this link with, for instance, the system here for free, Camarilla for free, we have a special moving average for free, and a lot more. All right, let's start with the euro dollar, looking bearish at this moment with price breaking below the 50 fib and also, of course, basically breaking below this 110.50 zone that was so critical for the bulls and bears. The break here indicating more downside pressure, at least towards 110, and if not, lower even, down to 109.40, for instance, which is these fibs. 61.8 fib is right at the round level, of course, at 110, and the 78 here. 0.6 fib at 109.40. Those are the targets for the moment of this downtrend. Now, as you might know, of course, I was looking for a bounce in here, thinking that this was going to be an ABC correction. That did not happen. Price made a consolidation here, but ultimately stayed below the 20 EMA, and there were a lot of candles below the 20 EMA. So from that point of view, pressure was too much. Price broke below this level and is now making several lower lows. I do think that this will continue down to the 61.8 fib, where I think at 110, there could be maybe some flag. And I'm not surprised. I would personally lean towards a downside after that, again, towards the 78.6 fib. Now, once it reaches these fibs, then the question is how price will respond, to, for instance, a deep fib like that. If there's a very strong close in reverse, then I still think that the bulls are in control. I'm still leaning towards a bullish version of this being, for instance, a wave A, this a B, and this a C. Now, I know that this could be controversial. I know there are a lot of fundamental traders out there that are bearish on this euro dollar, and I understand that. But I'm still leaning towards this upside being too strong of a momentum just to fade. It's possible, but it would really have to break through this bottom. So yes, I'm bearish now, but not for this entire structure. Now, because it's retracing within, I think, a wave B, and it has space to, for instance, the 61 or the 78, or maybe even the 88.6 fib. But ultimately, I think this is more of a correction for upside. So let's see if that's correct. Now, I base that partly, at least, on the fact that this whole thing is slowing down. That has been going on for a long time, and I have been also wrong with the upside and bullishness on the euro dollar, as price made some upside, but ultimately a little bit more downside. So, from that point of view, the euro dollar bears have been slightly more correct indeed, because price ultimately is moving lower. But has it been very choppy and corrective and very slow. So from that point of view, definitely one of the biggest ranges here since probably back a few years ago when we had this mess in this zone here after the strong push down. But that was still clearly wave 4, and we did get that wave 5 eventually. All right, so to me, looks like this upside here, three candles up. Now, I know we had bearish engulfing twins, which is one of the reasons why I'm bearish at this moment, and I do think that there will be a break of the low of last week. But ultimately, I think that this could be a first indication of reversal. I think that there was a correction, downtrend, yes. But now, I don't know, these three candles just, to me, seem difficult to ignore. So I'm leaning towards 78, also because of the head and shoulders potential there. Inverted one, of course. Last month's monthly candle was also, let's not forget, bullish engulfing twin. Now, that's not everything, but it's one of the strongest bullish candles here, and definitely in 2 years. So it's not nothing either, I think. And so from that point of view, yeah, that's my position at this moment. I think that on the hourly chart, this is looking very impulsive at this moment. Candles are way below. Fractals and candles are below the 20 EMA. 20 EMA across 144, HMA is below 21 EMA, so it looks very bearish. And this is a bear flag. This was a bear flag. So yes, once price broke through here with this momentum like that with the flag, then this is starting to look more bearish, and I would expect that continuation. Now, same thing for the pound dollar. Let me renew this template though for a second. Okay, because ultimately, pound dollar could be making a bearish ABC, and it did hit the 144 EMA, but doesn't have to be the end of that. It could go lower. And it could go down to 127.50, which is a psychological round level, maybe even extend to 127.25, maybe 126.75. But if it really breaks below that, then this is starting to become a downtrend, and it could fall down. In that case, it could fall down to 125. So for the moment, considering the fractals and price that is below the 20 EMA, I don't think the 144 EMA will hold as support. Price did bounce at that spot, but I don't think that will be enough to flip, the direction here to the up. I don't think so. I do think that this is still likely to be an ABC, but I don't think this wave C is finished. And on the hourly chart, I was already bearish here because of that wave C, at least to the previous bottom. Now we've broken that previous bottom, and it's probably some extended wave five wave here, 1, 2, 3, 4, 5. Now whether we had the wave 4, I don't know. Difficult to say. We could say 1, 2, 3, 4 like this, and 1, 2, 1, 2, 3, 4. So an extended wave 5 basically. So another 5, 4, 5, maybe 2 bottoms still left there. That's why I said 127.25, even 126.75. It could extend that far. For the moment, though, all of these breaks here, basically bearish, right? And I think that again, if it breaks through these levels, another continuation lower, and maybe one more lower, likely. Now, eventually, this will die out, I think, because there will be divergence between the bottoms, and this downtrend channel will not last forever. And eventually, I think that if it does like that, there will be maybe a bigger bounce. The question is, how does that bounce look like? If it is an ABC here, it should be aggressive bounce and maybe a restart of the uptrend. But if things just keep going sideways like this, and prices below the 144 EMA, and it then breaks this flag to the downside, then, well, it could be breaking, and it could be full-fledged downtrend. It could even accelerate this downtrend channel. It could fly down to 125 in that case, and or fly down, move down maybe. So eventually, if it keeps pushing like that, it could actually break the bottom of this channel and accelerate like that, and then find resistance at the halfway mark, and then move down lower again. It could extend the channel like this, basically. This could be the halfway mark. Hang on, folks. This could be the new channel, right? The future channel. Now it's narrow, this current downtrend channel, right? But if it then moves lower like that, retraces and breaks like this, it could extend that channel. It could retrace again, hit the middle line. Now support becomes resistance, and then move down to 125. This is something that could happen, but I need price to see that or show that, of course. Otherwise, I'm still leaning towards this being a wave C for upside. So what I'm interested in trading is downside for the moment towards the 127.50, 127.25 targets. Break through this channel would be a breakout. And then I'll have to see how price responds to those support levels. If I see flags, then more downside. If I see a strong close in reverse, then I'm leaning towards this being an ABC. So I'm open-minded here and just keeping an eye on price action when it tests support, how it reacts to it before I make a decision about the long-term up or down here. All right, that's it for now. Join ecs.SWAT. A lot of updates coming soon. Course, I'm already halfway over finishing that course. Still need to record it, of course. Book is finished already. Just needs to be formatted, and it's expected to be ready in January, February. New automated systems, new strategies. So a lot of things coming up, new indicators, all of that coming up as soon as the course is finished. So wish you good trading in the meantime. Hope to see you as a SWAT member, and see you in the next video on Thursday. Cheers. Bye-bye.